soil, a fully regulated, seamless link between traditional finance and the digital crypto world, offering secure returns fully backed by tangible, real-world assets.
From meme to utility, Floki has it all. NFT metaverse game called Valhalla. Floki University, DeFi, charity, and shopping. Floki is governed by the people, for the people. Floki, together, there is no stopping us.
The Credify testnet is live, so head on over to demo.credify.finance to see how you can effortlessly experiment with autonomous earning, NFT corporate bonds, Credi and X-Credi utilities, and Module X.
There we go, obviously. Quite a kind welcome. There's been a couple of words. It seems I muted myself. Still, without further ado, let's deep dive into the market for what's happening, basically. All right, over here. Right, so we are with the market context of the overall positive market environment. It seems right there with Dow Jones Industrials at 39, almost 120.14% up, with a chart kind of like taking a little bit of hit right here below the 20-day moving average, as we see right now. And this 20-day moving average is rising, with the rising right above the rising 50-day average. However, this 50-day average is slightly to the upside, right? So there is not necessarily the most ridiculously bullish setup. The 50-day average mean trend overall for the course of April and May until now basically has been a little bit like fluctuating sideways, it seems, right? And more so, I would say, this positive rising crossover, bullish crossover of 20-day against the 50-day moving average shows a little bit of bullishness in the short term following the actual mid-April reversal, while it's all in the general overall main market tendency, the context defined as the rising 200-day moving average, basically otherwise known as the bull market, right? As we go deeper, this translates to 5,300s on the S&P 500 side, with 0.65% higher, with a little bit of better price action there. S&P is moving and doing better than Dow Jones Industrials right there. All the averages are actually below the price action. The price action is tilting right now, a little bit of consolidation slightly between 52.50 and 53.50 with a 100-point range, with a little bit of a kind of like a bearish engulfing outside day breakout yesterday, with a closing below the actual open and closing far below all the local candlesticks or the bars. Still, regardless, what matters is eventually, like I said, the positive 20-day over 50-day moving average. This 50-day moving average, if you compare it with the blue line, compared with the Dow Jones Industrials, Dow Jones is more flat, S&P is more upwards oriented, which is showing me that there is relative outperformance on a medium-term basis to where when considered Dow Jones Industrials, and at the same time 200-day moving average is actually the bottom curve, which is also tilting up and coming up at 47.5 and 47.50 right there. With the energy ETF, with the energy sector ETF, there is a little bit of a, I'd say, actual risk of a breakdown, right? We are right there at the support of 91 points for this energy sector ETF for spiders right there, with the top marked at 99, right? With this mid April reversal outside bay right there, and then ABC type of a correction. If we were to put it in the Elliott wave terms, again, huge shout out and thank you to everybody, to Rafa and to CryptoPN for taking up the mic issues right there. It's been resolved, so I appreciate it. Interestingly, there wasn't much interest. Typically when I talk a lot, then all the people just go to sleep. So it means maybe it's good that I didn't hear it. Still, if we are to continue, right, the energy sector, like I said, it's taking a little bit of slowdown, taking a little bit of a toll, if you will, slowdown. And price action is an ultimate indicator. However, if we want to understand the context of trends, the trends are actually represented by the 20-day moving average, the green line telling me exactly the short-term trend, 50-day trend being represented by the 50-day average, basically moving upwards. There's this bearish crossover. So the energy is kind of like doing a little bit worse, while S&P is doing a little bit better lately, and still rising, even though much less aggressively than when compared with S&P, at 87 approximately for the 200-day trend, representing the slightly elevated bull market tendency or the continuation. And then before we dive into crypto, eventually we have still the dollar issue, right? At 104.73, with a little bit of a reversal, ugly reversal, open at above the 105 points, and now right under 104.8. And there's a little bit of sideways price action over the course of the past 2 months. Eventually, the 200-day moving average is slightly oriented to the upside. However, there's not really much momentum in there. 50-day trend is moving more consecutively, while the 20-day trend is actually right there, turning down. VIX is at the actual lows, at the 6 months lows, if not more, right at 12.26. This tells us that the implied volatility index, as understood by the amount of put options as on the 30-day expectations on the put options on the S&P, for what traders anticipate for the volatility to be. The traders anticipate the volatility to be fairly low, with 4% drop as of today. The treasuries, the money market right there, the 30-year treasury bond prices are down 4.45%, with still consequent drop and rejection away and down from the 200-day moving average, which is above the falling 50-day average, which is above the rising 20-day average. So there is this positive local short-term tendency. However, the medium and the long-term trends are bearish, right? This seems to be like a little bit of a bear market rally, if anything, to the bond prices, while the TNX, representing the 10-year note yields, basically is a little bit of an opposite, right, to the USB, to the 30-year bond price. And at the same time, the chart is fairly similar to the dollar that we discussed, right? There is a lot of similarity between TNX and the dollar, something to consider, just maybe, ultimately. And how does it all connect ultimately to cryptos, right? Actually, before cryptos, there is one interesting point I wanted to mention, because obviously gold has been knocking on the all-time highs all the times, with 2450 right there on top, with the double top pattern, kind of like a setup right there at 2450, with a little bit of a rejection and a false breakout, if you will, at 2450, with their which is with the price of gold per ounce basically hovering on the daily continuous contract right above the 50-day moving average, giving a support at around 2320, if you will, right? So the medium-term support seems to be in line with the overall flat invisible line in the sun at 23, around 2300s, giving this a little bit of like a neckline to the potential double top pattern. If that happens, we measure the double top extension to the downside, the potential breakout target by taking the neckline at the level of 2300 and taking the high peaks at 2450, giving us a result of $150 per ounce basically difference, which if we measure from the breakout price from the breakout level to the downside, basically takes us to 2150, which is gonna get closer to the overall proximity of the 200-day moving average, which might be, if that is the actual case, which might be a little bit of a pullback into that area. However, like I said, silver has been doing particularly well with the reaching of the 12, 13-year high prices. Massive, incredible, massive breakout from the low 20s in mid-February with this triple bottom breakout, with this inverse head and shoulders, or the triple bottom breakout right there, towards the 33 target, right? So there is a 50% incline overall in the context of the last 2 or 3 months. That's quite a powerful setup, something worth mentioning definitely as we go. And ultimately, if we are to talk about the cryptos, then here we are, because well, the overall zoom out tells you that the cryptos are generally kind of like a mixed bag today, right? There's green and red, right? Interchangeably, there is not much necessarily consequence, if you will. It's a little bit like a, dice roll. It's a little bit like a coin flip, 50-50. It seems maybe a little bit like 60-40. Still, it's very close. So there's not much breadth in the market, right? There's not much power, there's not much momentum, and we're talking about basically 7 p.m. Central European time, 5 p.m. UTC Universal Time, and so on and so forth. So that's quite late into the day. We have just a couple of hours left before the daily close, about 6-7 hours left before the daily close, and still here we are with low volatility. So it seems it's a fairly quiet day with an actual top performer, if you will, being present. I'd argue Chainlink, right? The Chainlink seems to be or actually Dogecoin 3.09%, right? When with Chainlink being taken the second place to the best on my side over here, 2.62%. Okay, what a mess on the link chart. It seems it's a super noisy, super messy chart. There's not much persistence, it seems, right? We keep oscillating in the same region between 12.5 and actually 23. While those fluctuations are super noisy, there is much scattered data, there is much scattered price action. It's nothing constructive. While the 200-day moving average is actually moving higher, right? So generally, with the medium-term and the short-term slowdown, local declines, the 200-day moving average continues to rise, right? Which basically tells me that any severe drawdown, any severe dip on Chainlink in the rising 200-day moving average environment basically translates to those potentially good buying opportunities. So with that in mind, let's go deeper, because ultimately this chart of Bitcoin, what is it telling us? Well, it's telling us that there is some positive tendency on the 200-day moving average, obviously, with the 53.015 being the local 200-day moving average support, with the prices at 68,272, with the peak at almost 7,400. We are fairly close. We reached the recent high at 72,000, which is still a lower low, by the way. Right, so we have we have the sequence of highs and lows, which are turning lower and lower, except for the recent burst, which took us eventually to 72, still marketed as a lower low. Okay, so something eventually to consider with this chart. Something to consider. The volume profile doesn't necessarily seem too encouraging for the bulls, so I would argue. It's not something overly disturbing, I would say, for anything of the long-term interest, right? Anything of the long-term interest is represented by this rising black curve dominant tendency of the market, this prevailing tendency, so that whatever happens on the way, basically, regardless if there's just a little bit of a slowdown or not, if there's sideways price action, it may be just a temporary slowdown. However, the overall tendency is pointing upwards, right? So the bull market is actually accelerating. It's moving strongly, in the fair price of Bitcoin on a very lagging 200-day basis is 53,000. And if that's the case, then if you're lucky enough to get a market reset at $53,000, that might be considered by big money. ultimately the fair price. However, good luck catching those dips. First, we need to get them, right? Except just a quick fact, because um, ultimately, having the halving history where the previous halvings brought us nothing but three, 100x, sorry, 9,000%, 90x, basically from the first halving in 2012 all the way to the peak in 2013. The second halving in 2016 took us all the way to 17, 18 peak by 30x increase, all right? And then we basically moved to the third halving in May 2020 with the third halving of 700% towards the subsequent peak. And if that was the case, right, then what we can tell is that there's been always monstrous rally, and for most of the time, there were actually positive, strong encouragement rallies right there. So whatever happens, it seems that we have positive expectations ultimately, and if we do so, right, it seems that well, whatever we do, whatever it goes, let's say it goes 2 or 3x, even if it's significantly less or even 50% higher from 6,700 approximately, 67,000 approximately, that was the actual halving price right there. I would argue that may take us somewhere in the potentially 80, 90, $100,000 region, which is not a crazy target at all when you think about that. Okay, and well, just a quick indication on this side. Eventually, again, this is the 200-day moving average marked over here, with the volume profile a little bit declining, still powerful breakout given and confirmed by the volume against this inverse head and shoulders pattern, with the neckline being marked here, or for the more conservative bulls being taken in here with this massive breakout that happened towards 72,000, like I said. But there's a little bit of a slowdown. This slowdown is caused by a couple of factors. I made reference to those in my recent reports, and ultimately giving a massive warning indication, because ultimately, again, this breakout was not really accompanied by the breadth of the market. The breadth of the market wasn't necessarily particularly good, and the volume was declining. And even if it's declining, ultimately, it's not necessarily the word end scenario, but it's good to have the price action being accompanied basically by the rising volume profile, if you will, right? Showing more and more engagement, more transactions taking place ultimately as we go higher, confirming this contribution and the engagement on the investor side. While the price action remains, I wanted to say constructive, but it's not entirely constructive. It's still moving inside of this overall marked region. The range of the price is between 74,000 and approximately 56,000, right? So whatever happens in here, it's a little bit interesting because it doesn't give us definitive solution. We got close to 72K. Again, we got close to 74K as the all-time high. However, it's still really one of the same range of the prices, right, with a little bit of a slip between 56 and 57,000, with the peak at 74. So it's good that we're closer to the upper range, to the upper boundary on the entire range of the prices taken from the early March. Still, we didn't break out with the price action. Is still sideways oriented. We are just in the upper upper side of this actual range of the prices, right? So any breakout by definition is not necessarily extremely constructive by assumption. It may actually provide a lot of question marks right there. Okay, and if we are to move to a little bit of a different scope, to a different picture, represented by the 200-day moving average, but it's not a simple moving average. It's a Burbigator Pro trend line. This Burbigator Pro trend line, a little bit more skewed towards recent data, actually tells you that a fair Bitcoin price is $62,000, approximately 62,200, 62,300. So if you get to see a little bit of a rejection, imagine the market breaks for whatever reason, this is where I would ultimately search for the support, for the more immediate support. And that would potentially put this inverse head and shoulders pattern in a little bit of a question mark right there, right? And we know that those failed breakouts, failed patterns tend to perform better in the opposite direction, because if there's an overthrow on top, it grabs the liquidity out, actually erases all the all the false breakout buyers basically right there, it provides enough volatility, especially to the other leverage, to get liquidated, and then it typically slumps back under the same level of resistance, or it works the other way around from the support on. Here, with Ethereum, if we take a quick look, ultimately, like I said, there's a question because it's a little bit like a arguably no man's land. There's a powerful breakout still, again, similar context. We are still in the long range of prices between 4100s, 4200s almost, and in 2800s, 2900s. So I wouldn't say it's necessarily extremely bullish, right? So there's a 50% almost range, 30-50% drawdown from the 30-40% drawdown from the peak. We are still not bullish on the price action basis, right? We're still not bullish on the price action basis. We are bullish in the long-term time frame. However, the medium-term, long-term basis is still a little bit of a slowdown, right there from early March, with the 200-day BPRO trend line just marked this direction of this trend line, the slope of this trend line, showing you that there's a lot of stability, much more stability when compared to Bitcoin. Again, just take a look, right? 200-day moving average on Bitcoin, which is clearly rising, and a 200-day moving average on Ethereum, which is for the BPRO trend line, for what is flat and sideways, right? So even though there's this massive positive turn of events basically for the ETFs to get approved, those ETFs had positive impact so far overall for the anticipation side, right? Which typically makes and encourages traders to speculate, for which they have to build the demand, address the spot market, and then just get a little bit of the speculation asset. In those cases is Ethereum spot potentially, right? So there's this massive 20-day breakout that occurred just a couple of days ago in the anticipation on the ETFs. The ETFs brought us a lot of instability and a lot of volatility. This high wave doji, if you will, the high wave spinning top, giving us a range of 3,500 all the way to 3,900, almost 4,000. That's quite a massive range. That's quite a massive range for one day for Ethereum, basically of 10%, right? And it closed right in the middle. So it told us literally nothing. It was a lot of the market of prices open, they went up, they went down, and they ended up basically in the same place, right? That's what translates to this overall high wave spinning top candle type of a price action right there. This might be interesting chart. There's a little bit of a hint or a side tip. Side note, basically comparison of the gold prices in the black and the silver prices in the orange, showing clear and vast outperformance in the relative price action basis versus silver, right? Where silver basically grew from 28 all the way to 33, and gold grew from the breakout day from 2034, 2050 all the way to 24. So there is this massive significant increase, right, by 20%. While silver from the breakout level is actually, approximately about 10-15% maybe. So there's a little bit of a local weakness, a relative weakness, okay? And ultimately, I promised to go through the chart requests. However, before we do so, I highly encourage you to go and give it a check to all those kind of like long-term stories, right? For the long-term indicators, for the top peaks, whether or not we are in top peak area. The minus position index, which typically kind of like goes crazy when a lot of miners just go outside, of the market. They dump a lot of their efforts. We are not even there necessarily, right? With the recent turn of events, again, we are at minus 0.5, while the historical gigantic kind of like all-time spikes, were there with 1.56, right? So there's 300% difference basically right there between the actual MPI minus position index. So keep it in mind, perhaps be mindful on that. The MVRV, the realized market cap versus the actual market cap, the sum of the values of the on-chain transactions versus the market capitalization actually tells you that, we are right now at the level of 2.42, while the historical peak period started occurring anywhere above 7, right? 2.5, 2.4 versus 7. That's quite a long journey to be, well, to be present at any opportunity that could be called a potential peak or top. Quick check on the actual mining cost, the mining production costs, and almost 71,000 right there with the remaining past couple of days. With 24th, let's check a seasonality pattern for 24th until 31st of May with the almost 5% average return with 3.36% median return with 53% mixed trades, mixed results for the winning trade. So it's a little bit like a 50-50 flip. However, it's overall positive with the actual rewards being bigger, the gains being bigger than the losses. With max rise 23% in 2011, basically ever since, and the most recent in 2023, 24 of May through the end of May, basically with 6.65%. So there's an expectation for the 5% approximately average return to be had until the end of May, while overall it's a 53% of the time positive period. So a little bit better than a coin flip for the end of May, basically to turn positive, while still there's an overall positive tendency. And ultimately, this is exactly what I was talking about, right? There is this Altcoin reviews basically that took us last weeks to Credify, to STC, Tita Chain, who are both our partners, to GHX, to Telcoin, and to SDX. It's a little bit different this time because this time we're going to be covering just a couple of points, starting with C4E. There's been a couple of those. Let me just upload them real quick. So the firstly given period belonged basically to C4E, which is also our partner's chain for energy. So let me put it open, C4E token. Let me show it to you real quick. Let's check for the actual prices right there. Just keep searching for the C4E token, actually. Right there, C4E token price. It might take a second to find the actual chart right there. Bear with me. Because they just launched, right? Okay, so we're gonna check on that in a moment, and let's go to actually A0, LF0 first. So let me bring the chart that I had the other day for them. So this is exactly what we're sharing again. A0, LF0, those are excellent people with excellent team right there. They have just brand new partners of the Burbness, so shout out to them. With A0, it's an interesting case because it looks to me that, like, when you remind yourself of seeing, those massive rallies, basically that previously were sort of like, you used to think of them as something big, as in some big sideways price action was going, but then they shot up incredibly into the, into high valuation, into high prices. And then what used to be big, what used to be perceived as a big oscillation in the sideways environment actually turned out to be a long-term accumulation. So A0 looks to me a little bit like this massive potential big runner that is in this massive accumulation, that is in the long-term accumulation that has never really left this accumulation space. It's definitely not in a bull market, like most of the coins. It's not in the bull market, so it's not necessarily performing in the best technical performance. Basically, the 200-day moving average by the BPRO is basically falling, right? Which tells me that this is a falling trend, falling tendency, while it's oscillating. It's kind of like a sine curve. So it's locally downturn. It's locally bearish with the local resistance at 1.02, 1.01 right? We need to move this support right here and basically put it in 1.02, let's say, right? On a daily basis, it seems that it's just flashed this bullish breakout signal, right? However, like I said, it's sideways oriented, so keep that in mind. Okay, as long as it's sideways oriented between 0.7 70 cents and almost $2 right there for a zero, I love zero, it's still sideways, right? The sideways accumulation may need to resolve in one direction. If I were to argue, if I were to guess, my guess would be that it's going to resolve to the upside. And if it resolves to the upside, that might be the case, the actual case study of this massive, big, gigantic runner with this just tiny little bit of a squeezed accumulation that is squeezed in a hindsight, but it was exactly what you're looking at in the screen right now for Lexilo. So that might be it. That might be it. That might be it. Let's go and take a look at the next one, right? The next one is GHX. So let me open this one again. I'm not really affiliated with this project. However, it's something for some of you perhaps to consider. Ultimately, let's share this top right there. GHX Gamer Coin. The daily chart is still bearish, but it's so tightly bearish right there that it's it seems like it's very close to potential breakout, and this breakout potentially may take us further higher because the overall rising tendency of the market is oriented to the upside, which tells me that this is a strong bullish bull market represented both by the VPRO and the actual 200-day simple moving average, with the main support right now moved to 0.03 and a half cents. And the 200-day VPRO trend line is at 13, almost 14 cents, right? So there is a support. The resistance is at 16 cents approximately. So there is 3 cents of gap basically where all the price action is happening. And it seems that there is this massive expectation towards overall an upcoming breakout. So this expectation, it seems that it's coming to this invisible apex, which might actually take a turn of this actual breakout, right? So strong support at 8.8 cents, strong support on the 200-day VPRO trend line basis on the more current data on 14 cents, with the main resistance at 16 cents. So tight price action. The trends are up. I would guess with this positive RSI placement situation, that might actually break out to the upside. But first, I want to see this confirmed breakout based on the volatility frames and $16 right there. Otherwise, the bullish tendency resumes, and like it works for most of those projects. Ultimately, if there is a dip in the bull market, those dips are worth buying, at least in a hindsight, most of the time it seems. Okay, and there's another coin to be mentioned, and that coin is basically Telcoin, right? So let me just check real quick what the Telcoin was. Let me just load it up. And in the meantime, if you have any questions, we still have a couple of minutes of the show to answer any of your questions right there. Telcoin, let's check. Let's take a look at a Telcoin. Here we are with Telcoin. It's a long-term chart. It seems there's this positive breakout overall, right? The bull market breakout attempt was there. It happened. It took us from 0.0033 to 0.0056, 57, almost 60. So not bad at all. Quite a positive turn. Quite a powerful movement right there. The 200-day moving average keeps moving higher, which is a good thing. Ultimately, taking us higher on the 200-day basis. In the highest level since 2022. This massive breakout on the accumulation seems to be factual, right? There's a little bit of a cool down, a little bit of a retest, with a lot of widespread RSI fluctuations giving us not much credible insights, right? However, I would say that things are looking better and better with the bullish BPRO stance right now, with the key support at 0.003. 0.003, it seems to be the key support, with the 200-day BPRO trendline level support at 0.0033, giving us a little bit of a context for the support. So the things are looking pretty nice. They're not looking bad at all. There's this decent breakout. The breakout on there's confirmed on the volatility on the short-term basis on the daily B Pro trend line that the trends are moving up. It seems like an early stage of a bull market to me, technically. There was another request with Kujira, so let me take a minute just real quick to give you guys Kujira. Here's where we are with Kujira. Here is where we are. Okay. So it's bearish stance, right? The B Pro trend line, the B Pro setup is bearish right there. The 200-day B Pro trend line is falling, which tells me that there is this overall long-term tendency to decline of the bearish stance. So the things are not looking bullish at all. There is this light at the end of a tunnel with a prospect of a local upturn with the momentum breakout up there of a 50-day momentum trend. However, it's nothing powerful, I would argue. There is this consolidation, previous polarity change from the previous resistance to potentially take it into support at around $1, $1.10. So at 1.6, it's definitely still having, there is a prospect of a potential downfall, of another 30, 20, 30%. And if that happens, you have to be ready ultimately, right? So just the things, have dropped a lot, just Kujira or any other token has dropped a lot, doesn't necessarily mean it cannot drop any further. So I would take this risk that ultimately, the prices until confirmed otherwise, until you see this massive breakout to the upside and above $2.5, until this correction, this negative tendency gets broken up again in the upward direction, I would take it as a possible consequence and a potential result for the market to drop down towards 1.10. And by all means, and let me just find real quick those points from Chain for Energy. Those are our partners. Shout out to them again. Let me share them real quick. They're the DEPIN Layer 1 blockchain solution, basically foundation of decentralized community-driven energy system, which is interesting. They just had their IDO, right? Which ultimately means that they had the initial DEX offering, which is a good thing. For those who were attempting to track their prices, they are already listed on Coin Paprika, I think. They're also listed on CoinGecko. However, those listings do not really have much of the price action data just yet for obvious reasons, right? They have just had basically the IDO. So what seems to be the most reasonable solution is basically to place this shout out to their team and let's see for the price action integration into this larger CoinGecko, Coin Paprika, and Coin CMC Coin Market Cap. Ultimately, good project. Let's see where the market takes it. The community has shown a lot of hype in the comments, so quick shout out again to the community, C4E, Chain for Energy. And I think that's going to be quite a fair placement to thank for your patience, right? There has been a little bit of crazy nonchalant take and kickoff from my end, right? So thanks for being here with me. And what can I also encourage you guys to do is to drop a follow to all of those partners, to all of those great excellent brands that I mentioned today for C4E, Chain for Energy, for A0, which are our partners, both for GHX, who are Gamer Hash. I'm not affiliated, so feel free to go ahead and give a review of the chart that I discussed today, with Kujira being in a little bit in a declining territory, with Toko and looking very nice for the long-term growth. And what can I say? Stay updated. If you're not following us already on Twitter or X, go ahead and follow us at the Birbnest or at crypto_BIRB, like Barbara, and head over to our YouTube. Go ahead at the Birbnest and push the subscribe button, put that on for the notification bell so that you stay notified anytime we put out new content piece. And there's quite a lot of you. There's 1,700 people watching that live. So huge shout out to all of you guys. Have a blast of the day. Have a blast. God bless you all. See you around, and I'll see you on the next session. Ciao, ciao.